All right, so good morning, everybody. It's Friday the 15th. Yes, Friday the 15th of December 2017. Thank you for attending today's webinar. Remind you that the purpose of this presentation is education. This is not an alert service, so I'm not here to make trade recommendations, but I will conduct technical and fundamental analysis, and I'll do so in real time, pip by pip, candle by candle, with the overriding goal of helping you put together trade plans throughout this beautiful New York trading session. If you're trading along with me using a demo account, then regardless of whether your plans are successful or not, you will have an opportunity to learn. Trading and investing is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. What's going on, Ronnie? Oh, sorry. It's been a, yeah. Oh, it's been a long. All right, so anyways, let's just dive into it. Let me put some pretty colors on your face. Trying to, let me switch. There you go. You got the pretty colors now? Living the dream, dreaming the life, dreaming live, right? Living the dream, dreaming live. Okay. So where do we go from here? Let's just start bottom left-hand corner. And this is our peso trade. I don't expect much of this until the end of the year, if at all. But just to stay on the trail of this thing. What more do I have to say? Zoop. Bottom, R high, R low. But it's still predominantly a downward move, but this is what? Three-wave correction. Right, here's a 382 down, maybe up to the 618, and then roll back around Mexican peso strength in the future. Yeah, I think my BHAG, my big, hairy, audacious bias idea, is that the U.S. dollar will weaken, even though they're raising interest rates, and very few others are seriously raising interest rates in a trend-like fashion. Generally, when the global macroeconomic conditions are improving, the dollar is weak. And not many people, if anybody, is actually saying that. But it seems to me when things are bad, the dollar's strong. When things are good, the dollar's weak. So I have that playing on in the back of my mind, even though every textbook and every college professor and every talking head on TV will tell you the US dollar will get stronger. Because the Fed's raising interest rates and everyone's been taught that that'll attract investment. And I'll say, well, the stock market's at an all-time high. People have been investing for 5 years. You know what I mean? So anyways, we'll see. We'll see. It really comes down to the Fed, though. We'll see. We have to have a constant trend. So maybe on a bigger level, people were overconfident in the Fed raising interest rates, and then they realized that they bought too much dollar. The Fed in 2017 wasn't going to raise as much as they initially thought, so the dollar weakens. And maybe the Fed does raise 3 times this year, or sorry, 2018. But I'm not on that train yet. I'm not on the 3 hike train yet. Yeah, Marina says USD bears have been great for 2 years already. Yeah, well, it's just I feel like I'm fighting waves, right? I'm fighting a tide. Um, I don't know, just the general idea. When things were bad, foreigners are buying U.S. dollars to buy U.S. treasuries. Now that things are good, foreigners don't need U.S. treasuries. In fact, the whole entire bond market, in my opinion, is generally bearish. Even our central bank is selling treasuries. But what about other central banks selling our treasuries that they bought? But it seems to me it's more down than up, and that would mean foreigners want their money back. So I don't know. So great. Let's see. Here's gold. I gotta do something. My guitar is echoing my voice again. Really gotta get rid of it. Sorry. So, look, it did come down. So I think we got this shoulder. I'm willing to accept this red candle as this projection. And you see it came up, came down to the moving average, and then it needs to move up to the next level of resistance. It could be here and then down. Yeah. I don't know which one. It doesn't matter to me. Yeah. And then retracement, and then maybe back around. All right. And the reason I think that is that the general idea of it coming down is valid. Okay. Okay. That is a downward move. If you are a bull on gold, one thing you should do when you recognize that if you're a bull on something but it's been predominantly bearish, never assume a reversal like this. Okay? Whatever time frame you're on, there's a higher time frame. Okay? So on the higher time frame, oh, hang on. Kenny says, Wayne, is there a clear difference between the development of taking profit market? Yes. Yes, there is, Kenny. So let me get to that first. Let me finish this first, okay? On the higher time frame, what you need to plan is that reversal pattern for the higher time frame. So if it truly is going to reverse, you need the reversal pattern on a higher time frame. And what I mean by that is what I'm predicting here is a correction, but it's still predominantly bearish. So in this time frame, it needs to double bottom of, and then go up. You don't want to take the small time frame and say, okay, it's been bearish, but I think it's going up because I'm generally a bull. Well, if you're generally bull, that's fine. You can look for the support, but whenever it gives you a support, a confirmation of support, assume a second test. Always assume that on the higher time frame. So that's why I'm saying here, okay, if I was a bull, and I was a bull, right? I didn't expect this dramatic bearish move. So 1, 2, 3, that's great. Into a fib zone, and the fib zone has to fail, and then you have a double bottom high scenario, and that is your reversal pattern. The market is bullish again. Okay, now a taking profit market, right? Kenny asks the difference between a take and profit market and a reversing market, and that's what the oscillators are for. Okay. So I'll show you this. Okay. You see this move in here? First of all, I kind of messed it up. I can get this better. Let's do it like that. Okay. All right. You see how this was a very bearish market? Very, very bearish. And then we get into this area here. You see, and I'll do this in red. This is the target, the target for bears. Okay? We knew that on the first day of the month, so it's not new. Okay? And every professional trader should, you would think, know this. It's not necessarily true, but you think they would. Okay? Right? So the first thing that you're going to see in a taking profit type scenario is divergence. And divergence shows up like this. Okay? For some reason, it kept falling further. So there's definitely no buyers here. But check this out. Okay? Market's fall. The market's falling. The market's falling. Oops. The market's falling. The market's falling. And we get to this point here. Let me highlight this with colors now. This is where we're at. Okay? Right here. And then look what happens. It's amazing, right? I mean, if you think about it, like, I think technical analysis is amazing. Anyways, at that exact moment, the oscillator starts going up. How does it do that? Well, first of all, what does it mean? And I think I wrote in my book the way that I describe this, because I don't know if it's actually true. It probably isn't even true. It's just the way I describe it to myself. But I think it is somewhat true, if not totally true. But it's just an algorithm, right? It's just measuring how the candles are behaving relative to the previous few candles. That's all it is, right? It's an algorithm. It doesn't think. It doesn't write poetry on its days off, right? It just prints pretty colors on the chart. But what it's telling me is that the bears in the market are taking profit. Bulls are not buying, but there are less and less bears. And you'll notice that the algorithm starts printing this behavior right at the target. And so even though the price is falling, there's less and less and less and less and less and less bears. Bears are taking profit and creating this upward move. Bears are taking profit. Bulls are not buying. Bears are taking profit. Now they're nervous, obviously, in this price. It fell a little too far. We're in a profit-taking zone, and it occurred as soon. This divergence occurred as soon as we hit the taking profit zone, not before. Okay, so they are taking profit. So this goes back to the previous conversation now. Why does it double bottom on this higher time frame first before going up? Well, there's no bulls yet. We have green candles. And this is a 4-hour chart. It's been green for 4 days, but nobody's buying yet. Isn't that interesting? It's been bullish for 4 days, if you look at the color of the candles at least. If I dropped into a smaller time frame, if I went from a 4-hour to like a 1 hour or a 15-minute or something, it would be generally bullish. But on the bigger time frame, right, it's interesting that it's been bearish. We've had green candles for generally 4 days, but nobody's buying. That's what the oscillator is saying. So what would it take to get bulls into the market? And what would it take to squeeze the rest of the bears out? Well, the bears that took profit are going to try again, right? Didn't they make money on this move? They're convinced now, right? They're absolutely convinced that it's bearish. They sold, they sold 2.5 weeks ago and made a lot of money. Great. Aren't they going to do it again? I'll never forget one day in my life when I was in my 20s. I was walking from, I think it was in university, and one of my roommates was Russian, like straight out of Moscow, 1992, right? Okay, so like, anyways, we're walking home, and this is California, so it's full of homeless people, right? The richest, you'd think the richest state in the world, man, it's full of homeless people. Anyways, so we're walking back, and there's a homeless person up in front, and I'm like, oh man, let's just cross the street, because he's clearly nuts. The guy's nuts, right? You can see he's crazy and homeless. So anyways, my buddy's like, no, that's all right. Let's talk to him. Bloody foreigner, right? So the Canadian says, all right, whatever, let's go. So the Canadian and the Russian approach the homeless person, and the homeless person says, give me $1. So I'm like, oh, they, right? No, the Russian's like, oh, yeah, okay, not a problem. Reaches into his wallet, pulls out $1, gives the homeless person, the crazy man, the $1. And I'm like, oh, you shouldn't have done that. And then the homeless person looks at my friend and says, give me another $1. And I love it. And I realized right there, that's how the world works. That's how it works. That's right. Give me another $1. And I'm like, okay. And I had a learning experience. That is the entire world. That's how it works right there. So these guys are like, give me another $1. Give me another $1. Just, we'll do it again. Give me another $1. The first one worked. Give me another $1. And I'm like, dude, this crazy homeless person is brilliant. Do you know how many salespeople I've trained over the years? Now, it has been recently, but in the past, I was a brilliant salesperson. And then I trained a bunch of people and realized I have a skill that a lot of people don't have, because a lot of people can't sell jack. And it's amazing. You have to work really hard to train a salesperson to ask to close the deal. Like, I want you to sign this contract. I want you to buy this product for me. It's really difficult to get somebody to even ask. They'll do everything else, like, I got a PowerPoint presentation, and why don't we have another meeting? Let's set up another call and talk. So to get someone to say, give me $1, it's brilliant. 99% of salespeople won't say, give me the sale. Give me some money. And for the guy to just, without even a hesitation, once he got the $1, to say, give me another $1, I thought, oh my God, this guy's the smartest man I've ever met. I'm going to like follow him around, and I'm going to carry his shoes and put candles around them, and yeah, genius, right? Yeah, I'm going to build a shrine in his honor. The world's greatest salesman. Give me another $1. And so later on in my life, I did do sales training where I had a bunch of, I took half the sales team, and I said, go out in the hallway, right? And so they go out in the hallway, and I tell this line of salespeople, I'm like, all right, you're going to sell these guys. I'm going to bring them back in the room, and you're going to sell them. Sell them. You do everything you possibly can in your sales presentation to get these guys to buy, right? And then I go out in the hallway, I'm like, all right, these guys are going to give you a bunch of sales nonsense. They're going to pitch you like crazy. Don't say yes until they've asked 3 times. They can be subtle, but they have to ask. They have to ask you to buy. But they have to ask 3 times. And if they ask 3 times, just say yes. And it's funny because they'll stand there and it'll go on for 45 minutes and all of a sudden someone will close a deal. And everyone will look like, what happened there? And they'll continue pitching. We'll go in for another hour and a half and all of a sudden someone else will close a deal. And all of a sudden they're like, wait. And right, and by the time you get to the last 3 people, they're like, you know, buy this product, buy this product, buy this product. Closed. And it's amazing. So anyways, long story short, they make money here. They're going to want to do it again. It's just human nature. They're going to want to do it again. Even if they think it might fail, it's like driving by a car accident. You have to look. You just made a bunch of money. You're selling. You're going to sell right into that support. And you know you shouldn't do it, but you're going to do it anyways. It's just what happens, okay? But right, and then that's where the opportunity for the double bottom approach is, because right, the first guys got out and got back in because they're nervous, but they're nervous because they know this area of support. So when they sell here, they're pretty doubtful already. They know that support and they know this bounce at support. But the previous guys that are too stupid to have taken profit, they didn't take profit. Now they're nervous that they were up, let's say, 200 pips, and then all of a sudden they were only up 100 pips, and they're sweating bullets, and they're praying, please go back, please fall, because they're clearly not using pivots. So they're like, please fall again, please fall again, please fall again, please, this time I'll, and then it'll come back, and now they're up 200 pips again, and as soon as it shows weakness, they'll bail. Because now it's their line in the sand. They don't have pivots. That's why they didn't take profit, right? So the second guys now feel lucky to get that profit back. And these guys already know the support's there. So they all bail on the second shoulder. And that's your double bottom. And bulls are looking for double bottoms. And now bulls are buying and bears are out. That's the anatomy of a reversal. Okay? That's the difference between a taking profit market and a reversal market. And it's all about the oscillator, baby. Because the next time it'll go like this. It'll be nice. Yeah. It's no joke. I actually done that several times now with sales, some sales training. Give me the sale, give me the sale, give me the sale. Buy the product, buy the product, buy the product. Okay. Yeah. Have you ever worked in sales? When you walk into the office and everyone's building binders, that's what they used to do. Now that sales are different, but when you see a bunch of salespeople building like binders full of literature, I'm like, what are you doing? Oh, I'm building binders. All right, you're fired. Get the hell out. Get the hell out. You're sales, dude. You don't need a binder. Get the hell out. Go get a marketing degree. Get on the phone. How about that? Pick up the phone. Why don't you talk to a client and ask them to buy a product? How about that? Building binders. Get the hell out of here. Yeah. No, Ryan's a great salesperson, by the way. I would hire Ryan in a heartbeat. You got to be tenacious, but you got to be polite and courteous, but you have to be focused and driven. Absolutely. Most salespeople, this idea that salespeople are scumbags, it's because those guys don't know how to sell. So they're rude and obnoxious and all that. You have to be a strong person, and you have to be a focused person, and you have to be a driven person, but you can also be polite and courteous. And that's what Ryan is. Yeah. I always shock people in sales because I tell them the truth. And people couldn't believe it. Like, there's a sales guy telling me the truth. They just couldn't believe it. They're like, oh my God, you're totally honest and sincere with me. I'm like, yeah. That's why. That's why I was successful. I was honest and sincere. It's amazing, right? Amazing, shocking qualities. All right, so that was that. That's the anatomy of a reversal using gold, crude. Oh yeah, I was saying if you thought it was falling, you might measure the head and shoulders. There's a neckline, all that. So your projection for a fall would be here. I'm still generally bullish, but you know that. We haven't printed a reversal yet on the daily, at least. Okay, but we got some serious things to be worried about if you're a bull. What did we just talk about? In this case, bulls are taking profit. Mickey's Comcast door to door. Wow, really, Mickey? Yeah, that's really funny. Comcast, for what is it, 7 years in a row, has been voted the worst customer service in the United States. Amazing. So to sell that, you're like, whoa. Yeah, amazing. Yeah, yeah. Buy some Comcast. So now let me ask you something. So it was door to door. So you didn't even know if they had Comcast or not? I suppose you might have known that, but probably not. And if you did, you'd say, well, I'm just doing a survey. If you have 45 minutes, I'd like you to fill out the survey. No, I don't have. Okay, great. And you go to the next house. Do you have Comcast? No. Oh, okay. Let me give you something for free, right? Oh, okay, you did all that. It's just funny. Oh yeah, see, all right, yeah, yeah. So all the salespeople are coming out of the woodwork. Now I'll tell you what. The interesting thing. Let's bring this into Forex. And I think I say it in the beginning of my book, and I used to do it when I did a lot of presentations, when I did all the conferences for Forex and stuff. But it seems to me like a lot of people that fall into Forex as retail Forex traders, we're entrepreneurs, one way or the other. We're small business owners. We're salespeople, because like salespeople have never had a real job. You know how I know that? Where did you get your sales degree? Was it Harvard? Was it Yale? Was it Ohio State? Where did you get your sales degree? Wait, the vice president of sales doesn't have a sales degree. The vice president of engineering has an engineering degree. Vice president, the CFO has a finance degree. Like salespeople don't have degrees in sales because there isn't such a thing, right? So, you fall into sales, and very often if you're selling, replacement windows or something, you're entrepreneurial, or you just simply can't hold a regular job. You can't do a 9 to 5. You just can't. So this is how you get into trading, because like, hey, it's not a 9 to 5. You can do it whenever you want, and, all that kind of stuff. It's not like you work for Deutsche Bank, right? How do you get a job at Deutsche Bank? Well, you went to Harvard and you got a finance degree, right? And that, right? So we're here as retail Forex traders because we're entrepreneurs, we're small business owners, we're salespeople, we're degenerates that can't hold a regular job. But we usually get to our success by taking on risk, by working really hard and all that kind of stuff, right? So that's how we all got here. Because we can't hold, wow, I'm really sick, by the way. Can you tell that? I'm getting sicker as I'm talking. I haven't slept enough. Hang on, I need to blow my nose, but I can't. But anyways, so we all get here in our different paths, our entrepreneurial paths. But to be an entrepreneur is to accept risk, right? I mean, the other way is we could have gone to a legitimate university, got a serious degree, and got hired after B school into a bank and then started trading for a bank. I mean, we could have done it that way. And those guys don't take risks. They're risk averse. So we get here, retail side, by accepting risk. And that's how we found success in the past. But now that we're here, we're entrepreneurial spirited. We're that type of person. But it's funny because risk is not rewarded in Forex, not on a bigger picture. So we have to learn how to tame that. Yeah, right, Alan. A bunch of misfits couldn't handle the job. You know, and one thing that always bugged me too is, you know, real estate agents in particular, 99.9% of them are you know, semi-retired people that walk around and say, "Don't you just love the light in this space?" That's not sales. That's 99% of those guys. But then you'll find one person in your town that sells 90% of the homes. That person's a salesperson. Don't you just love the light in this space? I'm like, are you following me from room to room? Right? Why do you? I don't need your comment, honey. I get it. Yeah, the light's nice. I got it. I wish I had this much closet space in my house. Go have a coffee and down in the. But anyways. But you know, but then you find a salesperson that will sell homes, and they don't need to say that. But anyways, buy this house, buy this house, buy this house. Okay. Anyways, you know, but yeah. Anyways, I don't know where else. So let's leave it all at that. We're entrepreneurs. We accept risk. There's nowhere else for us to go. Otherwise, we'd already be there. But if you take this seriously, this is a very serious career that you can do for the next 20 or 30 years, and you can get really good. And yeah, and you can look at it that way. So there are multiple ways that you can look at the opportunity in front of you guys. It always starts out like get rich quick kind of stuff, which is really silly. So we got to get past that. The ones that survive get past that. If you look at it like a going to university 4 years, even though you're in a midlife crisis, you know, there's an output. You can work really hard learning Forex for the next 4 years and come out sort of like qualified to be vice president of sales, but you don't have a real sales degree. There's no vice president of Forex per se, but you could say, well, I've traded for the last 4 years successfully. Here's my track record. And by the way, I'm an expert in technical and fundamental analysis. And for that, you can do all kinds of things. You could do like, I passed the Series 3, right? The Series 3 says I'm an expert in fundamental analysis. If you are a grain elevator operator and you need to hedge your grain exposure, right? I know how to do that. I've passed the test. And by the way, 70% of the people fail that test. So I can say I am an expert in technical analysis, or sorry, fundamental analysis. You could also pass the series. What was it? What was the other one? The series 33. What is the little Forex one? I've forgotten. Series 5. No, it's no. Gee, I wish I forget. So, anyways, there are tests you can pass. You can become, what is the technical analysis one? The market traders, chartered technical analyst or whatever. So you can go out and get that CMT. Yeah, okay, you can do a CMT, and you can say, look, I'm a chartered market technician, so I know technical analysis. I've passed the Series 3. I know fundamental analysis. I've done this and I've done that. And you can come out in the next 4 years to say you have all those things. But the most important thing is bring your track record. And I do see firms out there that are hiring Forex people. And the first thing is, they say, bring your track record. They don't say, like, did you go to Harvard? Because a lot of positions, like you want to work for a bank, very often they'll start with, what Ivy League school did you go to? I went to Ohio State. Oh, you can't work here. Right? We don't hire Ohio State people. Who was here yesterday? I made them really mad. I'm like a pit bull. I can't let it go. But if you look at all the big shots of these big banks, they're Ivy League a-holes, right? They're jerks like me, but they're bigger jerks than me. So what do you do to be successful? Well, in coming in as a trader now. Isn't that discrimination? Yeah, well, the funny thing to be is like Harvard will say, we have 22% Asians, so there's no more Asians. Well, that's also discrimination, right? Harvard, they can do whatever they want. That's the funny thing about Harvard. It's private. They don't take money from the government, so they can do whatever they want. But there is definitely discrimination and reverse discrimination. There are really smart Asian people that don't go to Harvard because they have enough Asian people. Now, I don't know if Harvard will actually say it, but look at the acceptance every year. They'll show you the breakdown. This year, by the way, is the first time in history the whites are not the majority. So, I think I don't know what the makeup is. I have to look at it, but the majority wasn't, but anyways. So they'll have, right? Yeah, Harvard has imposed on Indians and Chinese students and stuff. But so whatever. So what I'm saying here though is that you can work for like a trading firm, like a hedge fund, let's say, and they're not going to say what Ivy League school. I mean, they prefer, but they don't ask those questions to get the job interview. What do they say? How long you've been trading Forex, bring your track record. Can you do that? And then you can say, well, and I'm a CMT, I've passed the Series 3, I mean, here's what gets you a job now in a hedge fund that trades Forex. I've been trading Forex for 5 years. Here's my track record. By the way, I'm an expert in technical and fundamental analysis. That's it. Job interview's done, son. So they're going to look at things like risk-adjusted performance and just go through your trade history. So can you do that? I mean, a lot of people just can't go to Harvard. They can't go to Yale. They can't, right? It's impossible. But you can get a 5-year track record and work your butt off for the next 5 years learning technical and fundamental analysis, right? And then someone can bankroll you, right? Work for a small hedge fund. Maybe it's only got 500 million, so they give you short stack. Here's 500,000. Then you become one of the better traders. So then they give you a couple of million, give you 5 million. If you get a nice salary, you get nice bonuses, and you trade Forex for a living, what more do you want? That's obtainable, and that's realistic. Right, John says many market wizards and turtle traders and stuff like that never went to Ivy League school. Yeah, of course, that's what I'm saying. But walk into Deutsche Bank and say, I want to be the vice president of foreign exchange. What's the first thing they ask in that job interview? Where did you go to school? Do you think they're elitists? Bankers? You think bankers are elitists? They only let people in that are from the cool kids club. What do they pay? I'm like a banker, like let's say I mean, what is it? A foreign exchange trader? 500,000 a year, maybe a million, depending on who and what. Yeah, a friend of mine went through a divorce a couple of years, 4 years ago, and so he's been dating. And a couple of years ago, then he was dating this investment banker in Atlanta, which is not a big investment banking. It's not New York City, right? And so I'm like, and noticed a couple of things right off the bat. When you say your buddy is dating an investment banker, a lot of people will think a man. No, beautiful, 39-year-old woman. Okay? Not 39-year-old woman working in Atlanta, Georgia as an investment banker. It's not your typical setup, right? She made $1 million a year. Yeah, I'm just saying it's not typical, Katie. I'm not saying you can't. I'm just saying, first of all, it's not New York City, so there's not a lot of investment bankers. And in general, I wouldn't say the majority of investment bankers are women, but how about investment bankers in the South? Right? I think in the South, it's hard to get out of the typing pool. Still, I mean, it's amazing. It sucks. I think women are much smarter than men 99% of the time. But anyway, so I'm just saying, it's the South, it's Atlanta, it's investment banking. All those things are not common around here. So to put a 39-year-old woman into it is even more unusual. And then she makes $900,000 a year. I'm like, are you kidding me? That's a lot of money in Atlanta. That's not a lot of money in New York City. In Atlanta, holy crap. I was floored like, mother. You're kidding me. That's a lot of money. I'm like, does she have kids yet? Is she married? Nope, not married. 900,000. It's all disposable income? You're kidding me. Oh, was it wage? I don't know. I mean, but whatever. It's not, right? She's just doing her job. So either way, it doesn't matter. But yeah, I'm sure she made 300 salary and 600 bonus. That'd be what I would expect. But anyways, generally, if you want to work as and by the way, I did have a bank call me. And here's another funny story. I put on LinkedIn that I'm going to Harvard. And 2 weeks later, the biggest bank in Atlanta contacted me. Would you like to be the vice president of foreign exchange for our bank? How about that? Because the HR person was searching who in Atlanta knows foreign exchange and went to Harvard. Boom, Wayne McDonell. So they contacted me. That is absolutely totally true. I had a LinkedIn profile for many, 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 many years. No bank called me up and said, would you like to be vice president of our bank? Never. I put Harvard on my LinkedIn profile, and within 2 weeks, a bank calls me, would you like to be vice president of our bank? And I'm like, no, you can't pay me enough. Sorry, dude. Sorry, ma'am. Sorry, ma'am. But yeah, cool, right? So what I'm saying is it does matter in those situations. If you don't, you're not likely to get hired, right? It's just, that's that. So maybe working for a giant bank is not going to be an easy opportunity, but working as a professional in Forex is absolutely totally possible. And it starts with your mindset. Now, what does that mean? Can you work for a hedge fund, make $1 million a year? Yeah, probably. Can you raise your own fund and make $5 million a year? Yeah. Right? Or can you just trade your own money and just have like a retirement income? Oh yeah. But either scenario, work for a hedge fund, start your own hedge fund, or just work as and have a lifestyle type of thing. These are all things that are gifts to you. They're total opportunities, but you got to get out of the video game mindset. We got to get up. We got to get past the get rich quick scheme. And as soon as it hits you one day that it's a profession and it's a skill, and that you need to put a focus on it, like a true education, like you are going to spend the next 5 years learning, and in 5 years you must have a track record. Then that's the opportunity. You can work for a hedge fund. Look at my track record. You can start your own hedge fund. Look at my track record. Or you can trade your own money and just live on the retirement income. But you're consistent, you're disciplined, you're conservative, and you have a long-term focus. You understand? Right? Right? So in many industries, you just can't, you're not invited. Right? Like being VP of Deutsche Bank or something. You're just like, no, you're not even invited into the room. It's impossible. You can't get the meeting. They're not going to hire you. I wouldn't even think about it. The other stuff is on a silver platter for you. All you have to do is work your ass off really hard for years and years and years and years and years. Okay. How long? Well, I've been doing it for 15 years, John. So, I don't know. It's my favorite part of the day. So, as long as you'll let me, I suppose. Yeah. All right. So let's move on. So, do whatever you want to do with that knowledge. Okay. I drew a little line in the sand the other day, this little red line it seems to be holding. Amazing, huh? Amazing that 2 pivots on 2 different time frames held the market up. If you're a bear, you can still sell this. Oscillator says you're off. But that 21 is a sell if you're a bear. Okay. Bearish engulfing candle. Up. Right. Down. Retracement. So we'll see. This is dangerous. Yeah, very dangerous. I'd probably trade something else. Did we do euro dollar yet? This was a buy. I know we talked about this yesterday. Double bottom, higher high, roll reversal. I know we talked about it. So that's that. Right? Okay. 12 pips. Sorry. Don't get enough sleep, and now I'm sick. Double bottom, higher high, higher low. I'm certain that most people in this room have heard from me in the past that I say, if you want to build consistency in your trading, pick a pattern, trade that one pattern over and 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 measure how well do you do, what time frames do you set it up, all that kind of stuff. And the pattern I suggest is this one. All right. Oh, yeah. It's not price action. It's just double bottom, higher, 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 right? Double bottom, 1, 2, 3. I've suggested it many. 4 or 5 years ago, I remember I asked a regular member of ours, his name was YJ. I said to YJ, do that 100 times. He had some problem. He was a good trader, but I think he had some consistency problems. I'm like, I can fix that. And he's like, how do you do it? Trade that one pattern 100 times. And then you will be consistent. Right? Very, very Confucius-like. Right? And you can trade that the opposite too, the double top with the lower low, right? And your trade is here and your trade is here, right? Yeah, it's simple, but it's not just the double bottoms, Rin. It's the double bottom with the higher high. It's the double top with the lower low. Okay, so you have one bottom, you have two bottom, and then you have the higher high. Does anyone remember the secret word? This goes back a few years. Hammock. Thank you. Has anyone never heard of the secret word hammock? I used it as an anchor. Yeah, this comes from neuro-linguistic programming. Kind of shocking that someone would all of a sudden say hammock, right? So this is anchoring. So one of the times I've taught this idea, excuse me, I told a story about someone on a battleship in the Navy, and that the captain of the ship would run drills day and night. So you could be in the mess hall, I don't, what do you call it, the galley, where you're eating your food and you're eating your dinner, and all of a sudden, and you have to drop what you're doing and you run to your battle stations and you sit in the gun, and then that's it, nothing happened. There's a drill. Red alert, right? So then you go back to what you're doing. Well, you do this day and night, you're sleeping in your hammock, and all of a sudden, you get up and you run out of your room and you're running down the hall, and at the end of the hall, there's a big steel door. Big, heavy one. You've seen it where you have to turn the wheel and you open it up, and then you got to duck through it, and then you got to climb up the ladder to get to the next level, run to your battle stations, get in there. Now you got your gun, and it's a drill. Okay? Day and night, night and day, over and over and over again. To the point where it's the middle of the night, you're sleeping in your hammock, and you jump out of bed, you put your boots on, you run down the hall, and you duck your head, and you haven't even opened your eyes yet. You've done it so many times, and you run up the ladder, and you're still basically asleep. And you can get into your thing, and you're not awake. But you can do it. Like, you can do it to the point where you can duck your head to avoid the top of that round steel door frame, right? Because you drill and you drill and you drill and you drill and you drill until you literally can do it in your sleep. That's going back to the advice to YJ, and my advice I've given here to you several times, is that if you practice like this, the one thing you know for sure in life is how to trade a double bottom with a higher high or a double top with a lower low. It's second nature. You've practiced it so much. You're an absolute total expert. You have done it 1,000 times. Okay? And the key word here that I used for an anchor is the hammock. The hammock that you're sleeping in the battleship, because you don't know when it's coming, but all of a sudden, and you got to be able to jump out of your hammock, put your boots on, run down the hallway, duck your head, climb up the ladder, and get to your battle station, all while still half asleep. Hammock. Hammock is the anchor for a double bottom 1, 2, 3. Double bottom first, because now we know we have support. And the 1, 2, 3 is the higher. The 1 is the double bottom. The 2 is the higher high. And the 3 is the sweet spot between the 382 and the 618. Okay? And you're buying on the 3 because now you have an uptrend. Okay? And that's the only thing you do over and 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 over. It may be the only thing you do in 2018. Can you imagine that? 2018. What if that was the only thing you would do? Would you get good at it? Let me ask you, would you get good at it if that's the only thing you did? On 1 hour charts, 4 hour charts, 15-minute charts, on any pair you want, any time frame you want, but the only thing you did is look for the double top first, then you're like, I hope it makes a lower low. Ah, lower low, aha, hammock! Then you bust out a fib, then you draw a 382, 618 sweet spot, and now you're sitting and waiting. You understand? You still haven't traded. You're like, oh, double bottom. Oh my God, there's a double bottom. Awesome. I hope it makes a higher high. Oh, it's made a higher high. Oh man, this is awesome. Now what? All right, so I got to do a fib. Where's the 382? Where's the 50%? Where's the 618? I totally want to buy in this area. If it falls and I get a 5-8 cross or an oscillator move or whatever, I want to buy here. I want to buy this at 117.85. Please come down to 117.85, please. You understand like how specific we're being? And you're like, okay, I'll put my stop here. So imagine that's all you did. Would you get good at it? Yes. Now let me ask you about the other skills. Would you be patient as a trader? No, would you? If that's all you did, Adam. And I'm not asking, are you? If that's all you did, would you be patient? Does trading in that fashion require discipline? And would your results be consistent? But aren't these like qualities that you think are important to be a success as a currency trader? Yeah. You know, and so what if you did that for a year until you became a master of that? And you walked away with patience and discipline and consistency. And also, may I add one last thing? Would you be confident trading this particular pattern if you had done it over a course of a year over and over and over again, and you measured your success and you knew, let's say, 78.2% of the time you'll make 40 pips or more? I mean, you'd be insanely confident, right? Like, I mean, ridiculously confident, but not based on sort of an arrogant confidence, but because you track your results and you just know when I get this pattern, 74% of the time I'm going to make money. So it's just that, right? It's payday. You look at that like that's payday, and you're hoping to see the double bottom, and you're like, oh yeah, I'd really like support to hold here, and then you get the higher high, and you're like, dang, really? Here it comes. So it's going to come down to this area, and then I'm going to buy it and put my stop here. And when I see that, 74% of the time I make money. I mean, it's not arrogance at all. It's mastery, right? And then in 2019, you add a second pattern that you practice for a year. Huh? How about that? Right? I wish I had a mic. That's it. Boom! I'm done. I'm out of here. Wait, that didn't work out at all. I broke it. I broke it. Nettie. Nettie. All right. So I think we should end there for the week. I'll be here on Monday, though. Same time, same place, 2-drink minimum. Hold on, Aussie yen. All right. All right, hang on. Aussie yen? Really? All right. Aussie yen. All right. Let's see. Bottom. Higher high. Retracement. So somebody bought this at exactly a 50% retracement of the higher high off of the bottom. Huh. What the hell was going on here? What the hell was the trade plan, Aber? Is that a hammock? Amazing, right? No, here's the sweet spot. So when it made the higher high, this is what I was thinking. I want to buy it around this price. In fact, let me take it a little further. Okay. Right? So put a limit order at 50%, and I had a stop just lower than this. And I'm currently now up I was up 130 pips, but now I'm only up 100 or 95. Is that right? Yeah, 95. Yeah. That's interesting. There you go. It wasn't a very as pretty as a trade as the other one, but now you actually know what I'm doing. Shoot, I let the secret slip. Shoot, the secret's out. Wait, I've been telling you to do this for years, but nobody listens to me. But that's a great example. I bought a bottom after a higher high, and then I waited for a retracement. That's cool though, right? Cool. Sweet. You guys get it? So what, again, let's go through the process. You spot a bottom, and then you notice the higher high. So what you're predicting, if you will, let's draw it this way. I'm reverse drawing this. No, that's not quite right. Okay. When we're, excuse me, let me draw this in red, I guess. Okay, so I don't trade when I see the bottom. I wait for the higher high. And when we're still up here, all I've noticed is the high. But what I'm expecting is in the future, it hasn't happened yet, upward move. Because a bottom with a higher high sets me up for a higher low. Okay? Remember, 1 is the bottom, 2 is the higher high, and 3, and I'm here, 3 is my buy zone. Okay? But I'm doing this on the 2. When we're at 2, I say, okay, Zeus, if this comes back to 85.17, I want to go long. And I want to put my stop just below 1. So being, you know, a lazy man, I bought it at 50% and put a stop just below. Right? Isn't that interesting? Is that like it's not even a good trade. Look at the target though. Isn't that funny? Isn't that like the easiest 100 pips you've ever seen? But isn't that what it's supposed to be? Like, what are you doing? Yeah, Brooke's like, well, it's so much easier when you know what you're doing. I'm like, I know. So master something. It doesn't have to be this pattern. Just master something, because you'll walk away with patience and discipline. And if your something works, at least if you practiced it for a year, you say, well, I've only traded for a year, but here's my track record. And you're like, I have a lot to learn, but 74% of the time I make money, not because I fail to manage my risk properly, but because I just trade the one pattern. Like, I'm sorry, sir, ma'am. I'm very, very conservative. I'm very, very disciplined. I'm very, very patient. I don't trade very often, but when I do, I make money. Right? I don't always trade Forex, but when I trade Forex, I make money. Right? I mean, you're like, you're the most interesting trader alive. Yeah, I know. Yeah, you have to No, you have to call me. My new nickname is Commodore. Yeah, yeah. Commodore. Yeah. Yeah, yeah. So, yeah, it just, I mean, I don't know. There's my Christmas gift, I guess. My holiday gift, sorry. And what I do is I use two different pivot point plotters. So you just Google or check the marketplace, just two different pivot point plotters, that's all. So that's, there you go. So could be the greatest gift you ever got. And you're going to send me beautiful cigars, right? Yeah. Ron always sends me beautiful cigars. Yeah, not for me, just to piss my wife off. Like, I know, honey, I don't really want to smoke these cigars, but people keep just giving them to me, and I don't know, what am I going to do? It'd be rude for me not to smoke them. Oh, yeah. No, actually, I was at a party with professional investors last weekend, and and I'm like, hey, man, you got cigars? And oh, yeah, yeah. Right. These are financial advisors with, a couple hundred million each, 300 million each or something. And so we're out there. It's all the wives and the dudes and all that, and the support staff. It's an office party, right? So, anyways, so we're hanging out at his house. And he's got a great house. And he's got a great bar. I'm like, you got bourbon? And I'm like, no, you got any better bourbon? He's like, you like bourbon? I'm like, I love bourbon. So all of a sudden he's showing me his best bourbon, right? And then wine, and I'm like, no, 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 not that wine. Do you have any good wine? Oh, you like wine? Oh, I love wine. So all of a sudden, right? And I'm like, how about cigars? You got cigars? He's like, I have 200 cigars. Like, great, bust them out, right? So all of a sudden, there's men outside smoking cigars under the heater, right? Typical, right? And all of a sudden, it's typical Wayne time. So anyway, so we're hanging out in his backyard, view the lake, heaters above us. We're all smoking cigars, talking crap and money and all that kind of stuff. And then all of a sudden, his wife comes up, takes out a cigar, cuts it off, lights it up, starts smoking. I'm like, whoa, didn't expect it. Now, of course, just like the other conversation, like what? Women can't be investment bankers making $1 million a year? Yeah, they can. It's just not that common. Out of all the women in the party, she was the only one, and she was totally comfortable. Boom, I'm gonna light up a stogie. It was just cool, and everyone was like shocked. All the other women are like, "Is she just, yeah, yeah." It was just cool. Yeah, it was just cool. All right, so yeah, no, I appreciate you. Brooke says I really appreciate all the things you do, Wayne. Best of this. Thank you, but I really appreciate you guys. I really do. You're important to me. I'm tired. I slept in. I don't know why Google didn't wake me up. Stupid phone. But I jumped out of bed. I ran in the shower. And then I ran downstairs, grabbed a cup of coffee, and I ran here. And I apologize that I was 10 minutes late, but I'll do that for you. I'll run for you. I'll jump for you. I take you with me everywhere, you know. And if there's no Wi-Fi, you're still in my heart. So, yeah, no, I appreciate you. And I know this is a tough gig. I know it's a tough gig, but I'm an entrepreneur's entrepreneur. I think once you start investing into other entrepreneurs, you're an entrepreneur. So, I started out, I've always been an entrepreneur as a kid, going back to very young age. Uh, and a little bit famous for that in the previous life. So I guess what I'm saying is I believe I'm qualified, having reviewed more than 1,000 business plans and 1,000 patents. There's nothing better than this. This is the best small business you can possibly own. This is the best technology. An MT4 and a laptop is the most brilliant technology ever invented. It's the best business you could ever own. So you need to be all in on the effort side, because you don't have to go to Harvard. You don't have to have an engineering degree. You don't have to have a yellow Lamborghini to start. You need a laptop, you need MT4, and you need to work your ass off and get really, really, really good at what you do. And there's unlimited upside. It's crazy. Now, if you don't have a lot of money, you're short stacked, you're underfunded, right? You're undercapitalized, then you're going to need to develop a track record. And the track record is the product, is the service that you're trying to develop. Okay? It's the gold, not the trading, not the pips, not the money. If you have 10 grand in an account, you're not going to get filthy stinking rich. But if you can trade the 10 grand seriously, like it's 100 million or 10 billion, if you could just trade the 10 grand seriously for 5 years, then that's worth it. Now you have an asset. Okay? Now you have an asset. If the stock market goes up 10% a year and you make 20% a year, and the risk is similar, a risk-adjusted performance, and you can do this consistently in any market condition, when the market's bullish, when the market's bearish, when the market's sideways. That's all you need to do for 5 years. That's all you need to do, is outperform a benchmark. Now, you're supposed to be an absolute return fund and all this kind of stuff, which means you don't have a benchmark. But at the end of the day, that's bullcrap, because if someone's going to invest, they're thinking, well, I can give it to my stock guy, or I can give it to this Forex guy. My stock guy makes 10% a year. This Forex guy makes 20% a year. I mean, so, or I'll buy a yacht. I mean, that's what it always comes down to with rich people, right? You're not competing against another firm. You're competing against the yacht. So you have to give them a better story, or her a better story. And that's where you get your first stack. Some guy decides he doesn't need another yacht, so he's going to give you the money anyways, so he can brag about how awesome you are at his parties, with his smoking cigars with his buddies. And he's like, I got this Forex guy. He's awesome, man. This guy's a killer. He makes like 20% a year, risk adjusted. He's a machine. He doesn't trade much, but when he trades, he makes money. He's awesome. You should talk to my guy. You'll like him. He's the best. I mean, that's what it comes down to, though. Some rich creep bragging to all his other rich creeps about how awesome you are. Yeah, he loves hammocks or something, right? That's what it comes down to. But you have to have that track record. That's what you're aiming for, guys. That is what you need to be doing. January 1st, 2018, for the next 5 years, you're not worried about how much I need to make a lot of money. Stop worrying about that. Start focusing on consistency, discipline, and walking away 5 years from now with an asset worth $1 billion. Think of that. Something that says, if you gave me 100 million, I can, with patience and discipline and consistency, make a reasonable risk-adjusted performance in any market conditions. That's all you need to be able to do, and anything you want financially is available. And all of a sudden, you'll have to change your goals, because you'll realize the financial goals are silly. You want to sleep in a Tempur-Pedic bed? Buy one if you want. How much does it cost? What does it matter? It's a bed. It's cheap, right? Do you want a fancy car? Get a fancy car. You'll find out that the cheaper car is better anyways, right? Um, you need a fancy watch to feel good? Get a couple. Great. And then what? Right? Look at this. You see this? I don't have a watch. You know what kind of car I drive? I don't drive a car. Who cares? It doesn't matter. That's what poor people worry about, right? Don't worry about that stuff. But if you need it in the beginning, get it. But then all of a sudden you're like, there are more important things in life. And those are the things you'll want to focus on in the future. But you got to take care of the immediate pains first. So I'll tell you what, to get away from the immediate pains in your life that usually money can fix, work your ass off for the next 5 years with focus, not just working and running around. Focus. But once you have a 5-year track record of success, of just very, very conservative, disciplined, but consistent results, you can do whatever you want. You can have anything you want. And it'll change your life. You'll have to like come up with new goals in life. I mean, it'll blow you away. When I first started FX Bootcamp many years ago, one woman became so successful. Her parents, her elderly parents, thought she was a degenerate gambler. She thought, back then they thought it was like online gambling or something. So she bought them a house, bought them a car, bought herself no, didn't buy herself anything. She retired and moved to Korea and hung out with monks on top of a mountain or something because she had Korean roots, and so she went and became Korean again, got in touch with her Korean side, but like literally accomplished all her financial goals and then realized she just wanted to buy her parents a house so that they could retire comfortably, bought them a Cadillac because that was important, and then got in touch with her Korean side. You know, like big goals. Big, you have to, yeah, North Korea. But you have, it changes you when you have to come up with new goals in life. When you're sitting in your yellow Lamborghini going, I don't really like this car. It's really impractical. I don't feel any better. I feel weird driving down the street looking for people that are looking at me. Don't you? Right? And then you're like, oh, now what do I do? Life, love, family, happiness. It's cool. Right? It's a cool place to be, but it'll blow your mind. Right? It'll blow your mind when you have to come up with like, now what do I do with the rest of my life type questions. Now what? Yeah, maybe change the world. Yeah, maybe, huh? So have a wonderful weekend. I'll see you next week. We'll kick some ass then too. Nick, I don't know about this, but we all have goals. Yeah. So anyways, peace on earth. May the pips be with you. May your profits be above average. I'll see you tomorrow. Or sorry, see you Monday.